It's my pleasure to introduce you to our presenter for this webinar, Karen Kerber, CPA and shareholder in charge of audit here at KerberRose. Today, we will be covering topics like allowable expenses, forgivable expenses, how to calculate forgiveness, and other tips, techniques, and risks surrounding the Paycheck Protection Flexibility Act. We will pass the torch over to Karen now, and she will kick off today's presentation.
Thanks, Morgan. Certainly appreciate it. I'm going to try and push the mute all button and see if that gets rid of the background noise. So I'm hoping everyone is now muted. So again, please use the chat button if you need to in order to ask a question that we will be monitoring that during the presentation. Welcome, everybody. We're going to take a look at the Paycheck Protection Program and how we can go about maximizing the forgiveness. We received some great news when the PPP Flexibility Act was signed by the President last Friday. So we wanted to try and give you an update on that. With that, I'm going to just do my typical, this is what I know today slide. So there may be some additional interpretations and guidance that comes out after today's presentation that can certainly change some of the information that's contained herein. So be cognizant of that. And certainly if there is additional information that comes out, we will do our best to offer some additional webinars to go over those various items. With that said, just real briefly, as we all know, our PPP funds were based on our 2019 payroll. And I'm going to try muting again. There we go. And we were able to basically receive our funds based on that. Subsequent to that, as I indicated, the Flexibility Act was signed last Friday and was a great improvement for a number of the individuals that received PPP funds and how they were going to be able to utilize the funds and actually obtain forgiveness. There was an additional joint statement that was issued on Monday, and it clarified that even under the new 60% thresholds that we'll go over on how you can spend your money, that the partial forgiveness does remain intact. There was some concern when the bill was first signed that it became a cliff. And if you didn't spend at least 60% on payroll costs, that you would receive zero forgiveness. And that has been clarified that that is not the case. And you can receive partial forgiveness if you're not able to obtain that 60% threshold being used for payroll costs. Right now, remember that proceeds are not subject to, are not includable as income, but currently the IRS did come out and say that the expenses are not deductible. I have been reading that there's a bill that's being introduced or has been introduced that would take that away and allow these to be the PPP funds to not be included in income and the expenses to be deductible, which I believe was the original intent, but that's certainly not what the current guidance indicates. Just real briefly, taking a look at allowable versus forgivable expenses. Remember, when it comes to the allowable part, it's how and where you can spend your monies. And those allowable expenses include the payroll costs. You can see all the items that get pulled into payroll costs. You can also utilize the funds for mortgage interest, rent, and utilities. And for a number of those, the agreements did need to be in place prior to February 15th of 2020. So if you have a rent agreement, but it wasn't in place prior to that, then it wouldn't be allowable. Like you can't go out and enter into a new lease agreement today. And also deductible would be interest on other debt obligations that was incurred before 2/15 of 2020 as well. Those are a little bit different from the forgivable only because the forgivable ones are the allowable expenses that you utilize during your covered period. So it's all the same kind of expenses, but they need to be utilized either within the 8-week period or the 24-week period that we'll talk about, that you may have a choice between the two. So we'll go over that in a minute here as well. If anybody participated in this presentation, maybe about a month ago or so, I'm not quite sure when it happened. I know we were asked about utilities and what utilities are allowable. This has not been really released by the SBA at this point, so there's no direct authoritative guidance on what utilities are allowable. But I thought I would take an opportunity to list out what we believe to be true as of today. And again, maybe this will change, but it's what I believe to be true as of today as we're doing this presentation. So any electric, water, sewer, gas, telephone, both your cell phones as well as your landlines, your internet bill, and the one that was raising the most questions has been transportation costs and asking what is included in transportation costs. Well, I have found a number of individuals who believe that transportation costs is going to include like their standard mileage rate or the actual expenses relating to operating of the vehicle, the gas, oil, and repairs. I have not seen that be authoritative yet from the SBA, but it's something that you could consider tracking and starting to include on your forgiveness worksheet, maybe on the bottom of the sheet, as something that you may wish to be able to easily delete or find in case that comes back and is not true in the end once they issue that additional guidance from the SBA. Which, by the way, my understanding is the SBA had intended to release like an additional 30 question and answer, kind of like facts about the program. And then the new bill was signed, so they held those. So we are expecting that the SBA will be coming along with some additional guidance, just not certain of what the actual timing of that is going to be. So what is the covered period? Well, if you already have your PPP funds in hand prior to June 5th, you can elect to utilize that original 8-week period. And there are some folks that they were able to basically continue to operate at close to either full capacity and or they continued to pay their employees for not working. So they weren't really seeing an issue with utilizing their full PPP funds within that 8-week period when it's combined for the using of payroll at least 75% and those other costs that we talked about earlier. So if you happen to be one of those folks, you can certainly continue to go on the premise that you're going to utilize the 8-week period. But if that's not the case, which for a majority it seemed like of individuals, they were really struggling with being able to utilize their PPP funds within 8 weeks. Their businesses were still closed, their employees were on unemployment, and they really weren't going to be able to utilize the funds. Well, this is where the great news came in. And now your covered period is the earlier of 24 weeks after the date the proceeds were received, or December 31st of 2020. So whichever date that timing is, that's going to be the covered period for anybody who is just receiving their funds. And right now, it does appear as though there's a flurry of activity of applying for PPP funds again, because now there is confidence that, yes, I can borrow this money and I can actually utilize it and have it forgiven. So that is great news for a lot of individuals who were really struggling with if they were going to be able to utilize those funds. The general forgiveness rules are to be forgiven, it must be both a covered expense as well as a forgivable cost. So needs to fall in those allowable and then within that covered period in order to be able to qualify for that forgiveness. They have changed it to be spending at least 60% of your PPP funds on payroll costs, and you can utilize up to no more than 40% on the other items, which was basically the payroll expenses, the rent, the utilities, and the mortgage interest. Receive a lot of questions about how do we know what potentially that dollar amount is if we've spent less than 60% on payroll costs. The simplest thing to do, and I think you'll see this later in the slides, is to take whatever you did spend on payroll costs, divide it by 0.6, and that would be your total forgiveness that you would be eligible for. So how do you go about managing this forgiveness? There is still some caveats in there about your loan forgiveness can be reduced if you reduce your full-time employee equivalents. So you need to be careful about what your full-time equivalents were basically between February 15th of 2019 and June 30th of 2019. Or you could also choose the period of between January 1st of 2020 and February 29th of 2020. And we'll look at an example of that. But there was great news in this bill as well. And they did put some provisions in there to allow that to be a little bit more lenient. And we'll talk about that in a minute as well. The loan forgiveness can also be reduced if you happen to cut an employee's salary by more than 25%. So also be aware that if you had an individual and maybe you were paying them $40,000 a year and their salary because of the circumstances was cut to $30,000, well, then you would potentially have an issue and your forgiveness would be diminished as well. But we'll look at an example of that. And then there is the caveat here that if you're able to restore your employees, then you're actually not subject to having that reduced. And we'll talk about those in a little bit more as well. So it's kind of a 5-step process to calculating your forgiveness overall. And we'll take a look at each one of these particular steps as we go through. So first of all, as far as your loan proceeds, for example, if you received a loan for $100,000, but only $80,000 was spent on the forgivable covered expenses during that covered period, then $20,000 or more may not be forgiven. And that's under the assumption that you have the right blend between payroll costs and the other types of costs. So you would be subject to not having part of it forgiven if you haven't spent the money on those allowable and forgivable costs. The second rule looks at if all of those loan amounts are spent on the covered expenses, but again, not more than 40% of that can go towards non-payroll costs. So in order to obtain that forgiveness, you need to have that proper blend. So if you happen to be paying employees, but you're subject to really high, say, rent and utility payments, and that gets out of balance and you spend more than spend less than 60% on payroll costs, then you're going to have some element that won't be forgiven as well. So, for example, if you received a PPP loan of $100,000 and you spent $50,000 of that on payroll costs and $50,000 on non-payroll forgivable expenses, then basically your amount that's going to be forgiven under this calculation is only going to be the $83,333. As I mentioned, the easiest way to compute that is if you're not spending all of your dollars on, in that right proportion as far as the 60-40 split, is to take your payroll costs and divide it by 0.6 or 60% to come up with the total amount that would be forgiven. We're expecting this shouldn't be as big of an issue because if you remember when you calculated your PPP proceeds, you basically were receiving 2.5 months worth of payroll. Well, now you have 24 weeks to pay that. So you have a longer period of time to utilize those dollars for payroll costs. And it was based on a much shorter period. So we're anticipating for most folks, this extension to the 24 weeks really should be helpful. There's also a third step in this, and this is where this decrease in the full-time equivalent employees may come into play, and that you need to take a look at the average number of full-time employees per month during your covered period, and you divide that by the average number of full-time employees based on the base period that you're choosing. So that base period or choice period is either the period of February 15th of 2019 through June 30th of 2019, or January 1st, 2020 through February 29th, 2020. You're certainly going to want to pick, in this case, the fewest employees that you can for that choice period or base period, that the lower that denominator you can get, the more forgiveness that you will receive. So keep that in mind when you're looking at those particular measurement periods. So as an example of that, I mentioned that in the previous slide that the forgiveness was going to be $83,333 based on $100,000 and spending 50% of that on payroll. Well, now if you also happen to drop your FTE equivalents during the covered period, you would see a further reduction. So in this case, you looked at your FTE equivalents between February 15th and June 30th of 2019, and you had 10.5% or 10.5 full-time equivalents, versus you also looked at the period of January 1st through February 29th of 2020, and you had 10. You're going to want to pick the lower, and then you can see what the calculation would be. Is you would take your $83,333 and you would multiply that times 9, which is your full-time equivalents during the covered period, and divide it by 10, which again is that lowest denominator you could pick. So your forgiveness would be $75,000. And this is based on if you don't restore your employees. And we'll see that in a slide coming up here as well. Mention that it could also be reduced if you happen to have reduced an employee's wages by more than 25% during that period of time. It does include any employee over $100,000. So you don't have to worry about calculating it on those folks for this particular step within the forgiveness calculator, but it can come into play, as we'll see on the next slide. So in this case, I kind of started over with the example, and we received a $100,000 PPP loan. We spent it $80,000 on payroll costs, $20,000 on non-payroll costs. So that means we start with the full amount of the loan being forgivable. But during this period of time, we did end up reducing our full-time equivalents, and we didn't get them back in place by the next period that we needed to. So it got reduced by 25/30ths. And again, that's because our average full-time employees during that covered period was 25, but the choice period that we chose was 30. So we do end up losing part of our forgiveness because of that. Then we also took and we reduced somebody's salary. So we took an individual and reduced the person's salary from basically by 50%. And for that measurement period, that ends up equating down to $5,000. So you end up subtracting out the $5,000 as well. So again, their forgiveness is reduced by that amount. Again, both of those reductions can go out the window if you can achieve restoring to full-time people and or meet some of the exceptions that we'll talk about in a minute. Just another example on that calculating if you happen to reduce somebody's salary. So in this case, employee A earned $3,500 for each two-week pay period during the most recent full quarter before your covered period. So you would be able to reduce their pay to $875 without there being any impact to your forgiveness. However, in the next scenario, if we reduce that pay by $1,500, suddenly we're going to end up with a reduction in our forgiveness by the amount that we decrease that pay by more than 25%. So I keep mentioning that you can restore employment and basically cure some of these things. So right now, if you are able to get back to your full-time equivalents within your 24 weeks or by December 31st, whichever is earlier, then that elimination or that reduction in your forgiveness is basically eliminated. And you don't have to worry about what happened during that period. And you also don't have to worry about that reduction in wages. So you do have to get them restored. If you never had any reductions during that covered period, then also don't worry about any of these calculations that we talked about as well. The new guidance that was just signed also clarified, and this was back on May 3rd that they did this clarification, is there were a lot of folks that were indicating that they were trying to bring their employees back, but the employees were refusing to come back, and they wanted to know how that impacted their full-time equivalents. Well, the SBA did come along and indicate that you just need to document that you were making an offer to the employee and that the employee was rejecting the offer. And then you didn't have to count those individuals as part of that reduction in full-time equivalents. So that was really great news when that came along. A caveat to that is you do also have to indicate to the unemployment office that they refuse to work because they are no longer eligible for unemployment in many cases, most cases, if they are actually refusing work from their employer. Some additional good news came about as part of the new Flexibility Act. And it indicates that if you are unable to find qualified employees, and again, you would need to document that you've been trying to hire folks and you're just not having anyone apply and you're not able to get back to that full-time equivalent, no matter how hard you try, you need to document your efforts in that regards to indicate that, yes, I've been trying to hire folks and this is how many positions I had open and I just couldn't find qualified candidates. And then that's also one of the safe harbors to not have your forgiveness reduced. Also, if your operations have still been restricted because of COVID-19, that's another reasoning why you would be able to document that, hey, I'm still only able to operate at 50%, so I certainly can't get back to the same number of full-time employees because I can't generate that much revenue or I don't have that same kind of level coming in. So that was other good news that came along that allowed some additional flexibility and relief from having to get up to that same number of full-time equivalents. Just as an example, being able to get the employees rehired by December 31st. So in a full forgiveness example, if you had 100 employees on February 15th, you laid off 25 in March, but you were able to rehire them, and you only used the fund for qualified expenses, then the entire amount of your loan would be forgiven. Flip side of that, partial forgiveness, you had 100 employees, you laid them off, you couldn't document why you didn't bring them back, used all the funds for the proper expenses, but then only $75,000 of that loan would be forgiven, and that's based on a $100,000 loan. Some things that you should think about. The first one, deciding whether to spend the entire proceeds on forgivable or allowable expenses. I think this one has become pretty simple to decide at this point. Certainly early on in this process, when folks were receiving the PPP funds, but were faced with all the limitations and the businesses not being in operations, it was a more difficult decision. But now, because we have up to this 24-week period to spend our funds on the appropriate, allowable, and forgivable expenses, to me, it makes most sense to do that. So I think this one has become fairly simple to make a decision for. You can decide whether to stick with that 8-week period or the 24-week period. And the 8-week period is only there for folks who already had their money in hand prior to the passing of the new act. So make that decision. There are some individuals, like I said, that were confident that they could spend the monies as they needed to within that 8-week period and get full forgiveness. Well, if I was you, I would go ahead, put in my application, and go through and try and get that forgiveness as early as possible. I have heard that even if you put that application in, then all of a sudden, if for some reason they maybe decide that, nope, you didn't quite spend your money right, that they'll allow you then to utilize some of the expenses up to that 24-week period. So I think it would still be prudent to go ahead and put your application in with the bank for forgiveness. Deciding on whether to spend more than 40% of expenditures on non-payroll items. As I said, if you happen to be the kind of business that has really high rents, really high utilities, just those high non-payroll costs, maybe you don't have a choice and you want to spend more than 40% on those kind of expenditures. But certainly now, when you're looking at having received 2.5 times your payroll, 2.5 times that monthly amount, now you look at it and you basically have roughly 6 months to spend that. You should be able to balance that, hopefully, and at least demonstrate that you utilized it for payroll costs and document that on your spreadsheet that you were utilizing it for that particular function and not all the overhead stuff. Make sure you are looking at your 8-week and 24-week period closely. They do mean specifically those particular days. So it's not that you receive it on, a Thursday and 24 weeks from now, you look at the Thursday again. It's actually going to be the Wednesday. So make sure you are looking at that appropriately and utilizing your funds within the specified period of time. Remember, forgivable expenses must be incurred and paid during the 8-week or 24-week period. Otherwise, they may end up not being allowable. Expenses that you were paying in advance, like rent, health insurance, they could be trouble if you don't manage those appropriately. As an example, someone who received their PPP loan early on, if they paid some expenses on May 1st for April and the PPP loan was received on April 16th, then no portion of those are deductible. You're not able to allocate them because they need to be paid during that 8-week or 24-week period. Same thing is true with payroll, that you need to take a close look at that and decide what your payroll periods are going to be. You have a little bit of flexibility that they are allowing, so you no longer have to worry about running special payrolls, but make sure that you're also looking at those as well. So in this example, if you had a payroll for the period of 4/1/20 through 4/15/20, and you paid that on 4/20, but your proceeds came on 4/16, you may not qualify for any of those expenses because they weren't incurred. But again, you need to be consistent because they did come through, and basically what the payroll are allowing you to decide when you want that payroll period to fall. But you can't scoop in both ends of the spectrum is basically what it boils down to. You could also be making some payments at the end of the period that may be problematic. So for example, if you make a rent period or a rent payment on July 1st, but that period really runs to August 1st for rent, you would potentially have an issue there because if your 24-week period went beyond that, of having that being incurred during that particular period of time. You may want to also consider if there's any additional retirement plan contributions or wages or additional salary kind of items that you would like to pay out during this period of time. As I mentioned, initially we thought we had to do special payroll runs, but those should no longer be necessary as long as you pay that payroll on the next regular payroll date. So for example, if your pay period happens to end on August 15th, but your PPP funds needed to be paid by August 18th, and you didn't get that paycheck cut until the 22nd, that's okay, because that would be your next regular payroll date. So again, really would be prudent to look at your payroll dates and ensure when your PPP funds are going to end, and to ensure which payroll periods you are including within your either 8-week or 24-week period. We have been suggesting within your accounting records that you create the PPP loan as a long-term liability account. So for many folks, they utilize QuickBooks or some other third-party software. We have been recommending when you receive the funds that you create that and put that there as a liability account. Obviously, the offset would be to whichever checking or savings account those funds went to. And then as you spend those monies, do a journal entry to move it from the liability account to another income account so that you can track those appropriately. Make sure you're breaking out your payroll expenses. Be cognizant of the fact that at least 60% of your PPP funds should be utilized for payroll expenses in order to be eligible for that full forgiveness. Remember, it does exclude employer federal taxes paid, so you cannot include the employer share of Social Security and Medicare as part of your payroll expenses. And also remember that you need to cap the salaries of the folks that are making over $100,000, which again, because of the extension of time, raised that from previously it was like $8,333, I believe, to up over $45,000. We are also anticipating that sole proprietors and independent contractors, the folks without employees, partners, if you had no employees in your partnership, should automatically receive the full loan forgiveness. If you step back and you think about it, well, your PPP loan was based on basically 2.5 times of a monthly payroll. Well, now you have 6 months. So you should be able to utilize all of your PPP funds to pay yourself your payroll and receive that full forgiveness. You will work with your lender to request that forgiveness. There is an application that is currently out there. I believe it was about 11 pages. There was a lot of concern about it being somewhat complex and a little bit difficult to work through. Once you submit that to your lender, they're supposed to make a decision on the forgiveness within 60 days. We are being told that there's a shorter form being worked on to make this a simpler process. And I think to even help people achieve 100% forgiveness, because I think that was the original intent. So anything they can do to make it easier for folks to document it and obtain that, I think they'll continue to work on. The loan repayment terms. So if you happen to have a particular case where you're not able to demonstrate that you are eligible for 100% forgiveness, they did extend the repayment period to 5 years instead of 2 years, which is good news for everyone. Interest rate is still remaining at 1%. They also did extend the payment deferral date to the date that the SBA remits that borrower's loan forgiveness amount to the lender. And they're indicating that could be up to 150 days after that submission. So that also is going to be extending it out there for a longer period of time before you need to start making payments on the loan as well. Just a caveat, remember, if you happen to receive over $2 million, you are still subject to being audited by the SBA. Not certain who's going to do those audits, but you are subject to being audited to ensure that you actually needed the funds and then utilize the funds in the appropriate manner. They did issue additional guidance that if you receive less than that the banker will be able to rely upon the borrower's certification regarding the necessity of the loan. That's good news. They had came along at one point and said that they were going to audit others as appropriate, but they did clarify that. We do have some different loan calculators as tools to help you calculate your forgiveness. Certainly, if you have not received one of those from us, feel free to reach out and we will certainly be happy to provide that to you. One other thing, not really related directly to loan forgiveness, but that was included in this particular bill, is you are now able to take advantage of deferring payroll taxes during this period of time if you so choose. Originally, when this came out, you were not able to have a PPP loan and also defer your federal tax deposits. They are now allowing that, and you can make those payments. They're just deferred, so you still have to make them, but you couldn't defer your payment of your employer's share until 2021, and then the remaining part would be due in 2022. I caution everybody against doing that. Just because frequently people might lose sight of that and it may create some cash flow issues for you later on down the road. So I would highly encourage everyone to stay as current as they can with their payroll tax deposits. I'm going to turn over to the chat and take a look at some of the questions and try and answer as many as I'm able to. And I believe, as Morgan indicated, at the start of the program, we will create a document with the questions and the answers and get that out to everyone as well. So the first question is, can you spend 100% on payroll costs? Absolutely. I think we'll find that a number of folks may end up being able to do that with the extension to the 24-week period. So there is no requirement to utilize any of the funds for anything other than payroll costs. If your application only included payroll costs, can you request reimbursement for utility costs as long as 60% or greater stays with payroll? Yes, that original application was purely based on payroll costs. I think there was a box there to check for the other non-payroll related items, but certainly on that application for forgiveness, you can include those and utilize some for non-payroll costs as well. See the same one. You stated the expenses must be incurred and paid during the covered period, but the forgiveness application says to enter costs incurred or paid. We need clarification on this. I maybe struggle a little bit with how to explain this. So for the particular expenses, say that you received your loan proceeds on June 1st, okay? And it's probably a bad date. Let's use you received your loan proceeds on maybe the, I can use June 1st, sorry. So say you received your loan proceeds on June 1st and you were behind on your rent. and you hadn't paid your May rent yet. That's not an expense that you incurred during the period of time for your loan. So even though you paid it, doesn't mean that you can utilize that as an expense because it's not something that was incurred. That the PPP funds were not intended to help you catch up on bills that you fell behind on. On the flip side of that, they are allowing, when it comes to the payroll, that if you incurred those costs, and based on when your pay period end date is, as long as you pay those funds out on your next regularly scheduled payroll, then yes, you can deduct those costs that were incurred, even though they weren't paid. And that's a special exception really for the payroll that they allowed. I hope that clarifies that. If not, maybe type in an additional question and I'll try and take a kick at the cat again and explain that a little bit better. What if staff resign voluntarily? They have not addressed that as of yet, other than as long as you would now advertise to replace that position and you could demonstrate that you weren't able to find a qualified candidate, then that would not impact your forgiveness calculation. If you do the perfect split of 60-40, is only the payroll 60% forgivable or is the full loan forgivable? If you do that perfect split, you will have full forgiveness of that loan as long as you spent the dollars on the allowable costs. If we spend all of the funds during our 8-week period, can we apply for forgiveness right away? And you also maintain your employees during the 8 weeks? Absolutely. And I would highly encourage you to apply for that right away because you were eligible to elect to continue with that 8-week period. You were not required to choose the 24-week period instead. If you spend 100% of loan on payroll, then the only possible reduction is from FTE reduction percentage. Your possible reduction is from FTE reduction percentage. And I would need to retake a look at if it still comes into play and how it comes into play on if you reduced a person's wages by 25% or more during that period of time. I'm not sure that you can reduce one person's wages and add somebody else on and pay those dollars to them. So that one I would have to give a little bit more thought to. Our financial institution advised us to close our PPP loan on a payroll date in order to use the funds within the 8 weeks. They did not mention that the payroll expense must be incurred during the covered period. Like I said, you can choose when it comes to payroll. My understanding is if you wish to choose that one at the beginning of your PPP funds, where you maybe didn't incur it, but you paid it, you can do so, but then you can't include the one at the end as well. So you can't use that timing in effect to double dip and include payrolls from both ends. It has to be consistent pay periods, if that makes sense. How many hours are considered FTE? On the application for forgiveness, they were advising you to divide by 40 for that. I believe many of us thought that they would utilize 30 originally, but on the application, they did indicate 40 hours for the FTE. If some folks quit, again, you need to be able to demonstrate that you tried to hire them or that your operations were down or something in order to be able to not have that affect your forgiveness. Document that you offered them work and they refused to come back. And those kinds of things are taken into account when trying to determine your reduction in FTE. If covered period, the time frame wages were earned or paid, i.e., if we paid wages on May 1st, but they were earned prior to 4/30 when our PPP was granted, do those count? Again, that's going to depend. If you count those wages, then when you get to the end, you can't count the wages that were incurred, but you didn't get paid until after your PPP loan covered period is up. Otherwise, you can elect not to, or you cannot use those because they weren't incurred at the beginning, and utilize the ones at the end, even though they may be paid on your next regular payroll once your PPP loan is done. So you can't, I'll say, try and get the best of both worlds, have your cake and eat it too, that you have to pick one or the other. And for many folks, they may decide to not utilize that PPP at the beginning if it wasn't incurred, because maybe you didn't have as many employees then. Hopefully operations are getting back to higher levels at the end, and maybe you're further ahead utilizing those dollars on the back end. What if we had a part-time employee that stayed employed but has chosen not to work because she is considered high risk and their work had been frontline work? Would their lack of pay because of their choice not to work be considered a reduction in pay? If that person is choosing not to work, you could consider that to be refusing work, and then they would not be eligible for unemployment, and you would be able to not have them count as a reduction in your FTE. What if an employee was replaced by another lower paid employee? No fault of the employer, they just quit. So the covered period expense is less than the period before. Right now, they are indicating that as long as you restore the FTEs, you are okay. It doesn't have to be the same exact person. It doesn't have to be the same exact pay. So I think you would be okay with that. If you do not use the entire loan and have some extra money left over, it will turn into a 5-year loan at 1% interest. Right now, I believe that to be true. There was some discussion that if you did not utilize the entire loan, that they may ask you to pay that back at the end. I think that's something we are still waiting for some further clarification on. I see some responses coming in here, which are hopefully consistent with what I'm saying as well. Just want to confirm that the coverage date begins on the day we receive the money and not the origination date. That is correct. It's the date that you receive the money into your account. I'm seeing some additional questions and responses, so I think we will wade through those and include those in our document at the end. So I'm going to kind of go to the end. And if we don't use the whole loan, can we pay that portion of it back without incurring interest? I think they will charge you interest back to that date. But again, may need some additional clarification on that. Can you pay the whole loan? If you don't use the whole loan, can you pay that back? Yes. But I think they're still going to charge you some interest for the dollars that weren't used on allowable costs. So with that, I think, like I said, we'll wade through the rest of the questions and get those out to everybody with some responses. I'd like to thank Morgan for assisting me today, and thank you for all of you joining. And please look forward to some additional seminars, webinars, as we keep getting additional updates and changes to the information that is out there.
Yes, I can confirm that I do have a running list of all of our questions going on. So I thank you all for submitting those questions. We will be creating a running document to include all of those, and that will be included in the follow-up email we send you all. So I want to thank you all for attending. We appreciate all of you spending your time with KerberRose today. We will provide you with a recording of this webinar and the presentation slides. Should you still have any more questions for our presenter or the rest of our COVID-19 team, you are more than welcome to take a look at our COVID-19 resources page that is listed on this slide right here. And then we are also more than willing to provide guidance on this topic and many others. So take a look at the helpful tools on our COVID-19 resources page to help you understand how the PPP might be affecting you or other items throughout our COVID-19 pandemic right now. So again, we want to thank you all. I am finishing up copying some of these questions over, and Karen will take a look at them and respond to as many as she can, and we will include this in our email to everyone. So thank you all and have a wonderful day.